This is Marek Fuchs here today to talk to you about what happened with healthcare stocks and the stock market at large last week, and more importantly, puzzle out what might be happening in the coming week. Now, in the coming week, we're going to get a raft of economic reports and some earnings, and we need to make the sharp and defined distinction between weakness that is organically occurring and weakness that is the result of Sandy. Here's the deal, and it's a big one. It'll define essentially, effectively, how traders and investors do at the end of the day in this time period coming up. Everybody and his brother is going to be blaming everything, up to and including the Lindbergh kidnapping, on Sandy. But some of it is true, but not nearly all of it. And we have to start making that distinction. What, in terms of this weakness, we might see coming up is the result of Sandy, and what is just the result of an economy that's slowing in this fourth quarter for very systemic reasons, weakness in Europe, China, all those other things. But first up, last week. Now, Merck withdrew a cancer drug application that had already been rejected in the United States from European Union consideration. There's also a very interesting article in the Wall Street Journal, Let Your Fingers Do the Walking, Catch It, on how medical devices like implanted defibrillators from Medtronic are causing a host of privacy issues that have to be contended with. Now, the economy kept dancing along the lip of the so-called fiscal cliff. GDP was revised up, but not quite as up as people had hoped. And the Supreme Court on Friday agreed to take the case, a very influential case in generic drug circles, a $21 million judgment against Takeda Pharmaceuticals. Now keep an eye on this, we will too, to see how it winds its way through the court. And also, Mylan is selling a generic version of Pfizer's bladder drug. That's important to note also. As for this week, everybody from Athena Healthcare to Dow Chemical to Starbucks will be flapping their gums to analysts, and Toll Brothers reports earnings. That's obviously important for the housing industry and the economy at large. An influential Fed governor will be speaking on many topics, while President Obama will be talking to the Business Roundtable about the so-called fiscal cliff. So keep your eyes peeled and your ears open for those two talks. Now, job numbers come in on Friday, but pay them little heed if they're bad. Sandy may have run roughshod over the month, with the operative phrase being may have. We really don't know right now, right? Consumer spending numbers came out on Friday, and they weren't good, breaking a recent trend. Now, again, all of this is being blamed in a reflexive way on Sandy, but it can't be all the result of Sandy. And what we need to do here, with those job numbers, with the manufacturing numbers that will also come down the pike this week, and with any earnings that come out, and once we start getting retail sales numbers, is to make that sharp and defined distinction. How much of this weakness is, as they'll contend, the result of Sandy, and how much, as is more likely, is some combination of some Sandy and, more so, a weakening, slowing economy. The trend with this economy obviously has been gathering a little bit of momentum, looking good comparatively, and then the so-called recovery kind of snapping off or fizzling out, those green shoots that we've heard out of time and time again being trampled on. Again, here the complication is what portion of the weakness is Sandy and what is part of the natural course of things. And that's something we'll keep our eyes on, and I think you should too. In any case, if you disagree with me about any of this, and you clearly won't, but if you happen to, feel free to tweet me. My Twitter handle is down below the video. Also, obviously, feel free to tweet me any and all questions, but most of all, have a happy, healthy, and profitable week.